The market has been on a tear of late, seemingly like it only knows how to go up, giving plenty of investors reason for optimism, but also plenty of reasons to be concerned. Because if you've been investing for a few years now, you know that the S&P 500 or the stock market as a whole doesn't just continue to go up. Investing new money when every day you hear about a new record S&P 500 or a new record NASDAQ gives you reason to be plenty concerned, but there's always deals to be had out there. As such, in today's video, we're going to go deal hunting, and we're going to take a look at 3 cheap dividend stocks to consider buying in the month of March. All 3 of these companies appear to be trading at great valuations. So with that, let's get into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And if you enjoy my content, do me a huge favor. Click that like button down below. Subscribe to the channel, as that really helps with the algorithm and continues to help me grow this channel here. So in today's video, we're going deal hunting and taking a look at 3 cheap dividend stocks for the month of March. Let's begin with that first one, which is Amgen, stock ticker AMGN. Amgen, for those of you unaware, operates out of the healthcare sector as a biotech company. And for those of you that are heavy in the healthcare sector, then you know that 2023 was not a great year for that particular sector. It underperformed the S&P 500. However, that sector has flipped the script here in 2024 and has been heading in the right direction, actually outperforming the S&P 500. In fact, healthcare is a sector that I'm continuing to look to add to and grow my weighting within my overall portfolio. When it comes to Amgen, they currently have a market cap of $147 billion, and over the past 12 months, the stock is up 19%. However, year to date, it is down 3%. In the healthcare sector, all the buzz has been about GLP-1 magic weight loss drugs that have really been put out by Eli Lilly and Novo Nordisk. However, Amgen's been working on one of their own, but it really hasn't seemed to gain that much traction. And in the latest filing, when the company, although they reported great quarterly earnings and annual earnings, they did have a lot of questions that pertain to their weight loss drug that they're working on, and it just didn't hit. Analysts didn't like it, and shareholders certainly didn't like it, and we saw the stock sell off. With that sell-off, let's take a look at valuation and see, does Amgen make sense right now? Well, 2024 EPS estimates are right at $19.52 per share, putting shares of Amgen at a forward PE multiple of 14.3 times. The company overall has a 5-year average of 14.7 times. Not a huge discount when looking at this one single metric, but management believes that EPS could be as high as $20.30, which would actually put shares at a PE of 13.7, with EPS growth expected to accelerate. Now turning our attention to the dividend, we can see that Amgen pays a dividend that yields 3.3%. They have a 5-year dividend growth rate of roughly 10%, and they've been growing their dividend for 12 consecutive years. Analysts have a 12-month price target of $316, implying 13% upside from current levels to go alongside that 3.3% dividend yield. Before we move on to the next cheap dividend stock, let me tell you about today's sponsor, which is Cashflow University. If you've ever been interested in understanding and learning options and how you can utilize them to generate more passive income, then consider subscribing to Cashflow University. It's a premium options-based Discord community where they focus solely on gaining cash flow from options. That means utilizing cash-secured puts or covered calls or option spreads, all focused on generating more income. One of the channels that are within Cashflow University is focused just on smaller accounts, roughly around $5,000 to $10,000 accounts, where they're only trading one option contract. And you could see the returns on the screen here from April of last year all the way through February of this year. If you just traded one option contract within Cashflow University, these are the returns. So if you're interested in joining Cashflow University, go to joincfu.com and sign up today. Now we're going to move on to cheap dividend stock number 2, which is one of my favorites, and that is Starbucks. Stock ticker SBUX. Starbucks are on pretty much every corner. There's actually a Starbucks location, 2 Starbucks locations near me, where there's actually 2 physical locations in the same strip mall. I could literally stand outside the door of one of them and throw a baseball and hit the other building. But that's neither here nor there. We're here to talk about Starbucks the stock, not Starbucks being close near my house. However, Starbucks has changed a lot over the past 12 months. They are no longer under the leadership of Howard Schultz. They are now under the leadership of Laxman Narasimhan. And for those of you that have followed Starbucks for some time now, you know that their two largest markets are here in the US and over in China. But the China growth has really stalled, but a lot of folks are wondering if we're starting to get closer to a bottom, which means we could start to see a turnaround with shares of Starbucks. The company currently trades at a market cap of $107 billion. However, the stock just can't seem to get moving in the right direction, as over the past 12 months, shares are down 8%, and year to date, they are down 3%. As I mentioned, longtime CEO, two-term CEO, Howard Schultz retired from his CEO position as well as left the board last year. So he is completely out of the picture when it comes to Starbucks. And even though shares are down right now, and they've been held down for quite some time, this is that time to accumulate. For long-term investors, you're going to wish, when you look back and say, man, I wish I bought more shares at that time. We are getting that period right now to continue to accumulate. At least that's my approach. Accumulate more shares of Starbucks at today's great price. Let's turn our attention over to the company's dividend. You can see that they pay a dividend that yields 2.4%. The company's a dividend growth stock with a 5-year dividend growth rate of 10%, and they've been increasing their dividend for 13 consecutive years. For years now, the company has been known to have strong dividend growth. However, that's really slowed in the past few years, largely due to a global pandemic and the slowdown over in China. With the pandemic behind us and hopefully China bottoming in terms of economic growth, we could see that dividend start to pick up once again. Now let's take a look at valuation, where analysts have 2024 EPS estimates at $4.07 per share, which would equate to 15% EPS growth over 2023. That puts shares with a forward PE multiple of 22.8 times compared to the company's 5-year average of 30 times. A sizable discount, to say the least. However, Starbucks doesn't grow as fast as it once does. So are they commanding a 30 times multiple going forward? Not likely. But could they easily command something closer to 25 or 26 times? I believe that would be the sweet spot for this particular stock, which would still put shares at a sizable discount. In terms of price targets, analysts have a 12-month price target of $108 per share, implying 16% upside from current levels, to go alongside that 2.4% growing dividend. And that leads us to our third and final cheap dividend stock for the month of March, which is ConocoPhillips, stock ticker COP. I literally saved the best for last. I personally am upbeat on the energy sector here in 2024. I think it does have a lot of growth here moving forward, and there's an easy way to play energy. You can invest in the XLE, which is an energy-focused ETF. However, it's largely skewed towards the big major oil giants in Exxon and Chevron. But do you know what the third largest position within XLE is? ConocoPhillips. Looking here, you can see that ConocoPhillips has a market cap of $132 billion. Over the past 12 months, the stock is up only 9%, and year to date, it's down a few percentage points. The company is an oil and gas producer, and with the price of crude back hovering above $80, they are simply printing money. This is a company that can generate strong amounts of free cash flow, especially at these high oil prices. Right now, the company is generating a free cash flow yield of 6.5%. The energy sector, on average, generates a free cash flow yield of about 4.9%. I say it often, free cash flow is what makes the dividend grow. And speaking of that dividend, the company currently yields a dividend of 2.1% with a 5-year dividend growth rate of 20%. When it comes to oil, it can be very volatile at times. So it's really hard to find companies besides Exxon and Chevron that are able to consistently pay growing dividends for a long period of time. Now let's take a look at valuation, where we could see analysts have a 2024 EPS estimate of $8.45, which equates to a forward PE multiple of 13.5 times, well below the company's 5-year average of 14.5 times. So you're getting a decent little discount, nothing crazy, but that's with negative growth in terms of EPS. The following year, though, we're expecting 9% EPS growth, which would put today's prices at that much more of a discount. And as a long-term investor, that's what we're always looking to do. Take a step back with a long-term viewpoint. In terms of analysts, they have a 12-month price target of $137.15 for ConocoPhillips, which is implying 20% upside from current levels. So there we just covered 3 cheap dividend stocks to consider buying for the month of March. We had a healthcare company with Amgen, a consumer company with Starbucks, and an energy play with ConocoPhillips. Let me know, what do you think is some of the top cheap dividend stocks to consider buying down in the comments section below. And if you haven't done so yet, make sure you smash that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and we'll see you in the next one. Take care.